Shares of Broadcom absolutely soaring in the after hours, up nearly 16.5% after they reported their Q1 results. And look, as good as these results are over at Broadcom based on their business performance, I think we have to give our flowers to the CEO of Broadcom, Hock Tan, because he has done a phenomenal job running this company. I mean, when we get to the financials, it might just make you drool all over your phone. And then when we get to the technicals, this stock is walking back into a range where, if you've been following the channel a couple of days ago, we identified this level, and well, if you stepped in, you're probably looking pretty good right about now. Hey guys, hope you're doing well out there. It's time to take a look at shares of Broadcom Incorporated. Despite the market sliding over the past couple of days, and especially semiconductor names that are more related to AI taking a relatively large hit over the past couple of days, shares of Broadcom reversing a lot of those losses on a dime, basically up 16.5%. And again, year to date, you were down about 23% with this name coming into this print. Now, keep in mind, on a forward valuation, you're actually not overly expensive with shares of Broadcom, about 30 times a forward earnings multiple. We'll talk about why that's likely headed lower meaningfully over the next couple of quarters. Now, Q1 revenues came in at $14.92 billion. That was good for 25% growth year over year, beat expectations on Wall Street by a cool $330 million. It also came in with a nice bottom line beat. Now, again, expectations were closer to $14.6 billion. Broadcom just posted a number north of $14.9 billion. In fact, that is higher than the most bullish analyst on Wall Street. And in fact, it's also higher than the average estimate for Q2 revenues. So keep in mind, this company didn't just come in with a revenue figure higher than the most recent quarter. They in fact exceeded the next quarter's revenue estimates as well. That should tell you that signs over at Broadcom, and times really over at Broadcom, continue to remain strong. Now, we also got outlook for this company's Q2, and we got a very, very key statement by CEO Hock Tan, and that is that they continue to see strength in the AI semiconductor revenue, and they expect AI revenues to come in at $4.4 billion in the upcoming Q2 as hyperscale partners, think Amazon, think Microsoft, Google, continue to invest in the AI XPUs and the connectivity solutions for AI data centers. So this $4.4 billion number for Q2, this is probably the most important number that we got from this entire print, because to put that into perspective, Broadcom just posted $4.1 billion of AI semiconductor revenue in the most recent quarter, and that grew at nearly 77% year over year. So this company just grew a business roughly 77%, and they're expecting another $300 million added sequentially. That's right, sequentially on top of that business. They also gave us Q2 revenues at $14.9 billion. Again, consensus was right around $14.7 billion. So a couple of things to note about this guidance. First of all, they're, yes, of course, coming in above what Wall Street anticipated. That's always a good sign. But they just told you that they're going to expect roughly $300 billion sequential growth on the AI semiconductor revenues, and yet they're still guiding for total revenues about $14.9 billion. And in the most recent Q1, they just put up a number north of $14.9 billion. So as you look ahead over at Broadcom, I think CEO Hock Tan has mastered the art of under-promising and over-delivering. I mean, in fact, he has a Wall Street background, so he kind of knows how to tamp down expectations, sandbag numbers, in order to then come in with a beat to then see your shares pop something like 10-15% after you beat those expectations very, very easily. And so again, they're guiding for $14.9 billion of top line revenues. That's what they just posted in the Q1. I would fully expect this company to come in with a revenue figure at least of $15.2 billion, if not higher. I mean, if they can come closer to $16 billion, well, then this company is still, believe it or not, wildly undervalued, and you can probably continue to step into shares. Now, keep in mind, the AI semiconductor revenue still is a relatively small part of this business over at Broadcom. They have a very large infrastructure software business that is still growing roughly 47% year over year, came in with $6.7 billion. Think of the VMware acquisition that falls into this infrastructure software business. We'll talk more about that when we jump into the financials. But a couple of news stories that came out earlier in the week and then earlier on in February. First, the fact that NVIDIA and Broadcom are testing chips on Intel's, that's right, Intel's manufacturing process. So believe it or not, Intel's foundry business may or may not actually get some cash thrown at it from NVIDIA and Broadcom. Now, this story basically is just another data point that confirms that the semiconductor chain doesn't have a demand problem, they have a supply problem. And it's what we've heard from NVIDIA, it's what we've heard from TSM, it's what we've heard really across the chain from any semiconductor company out there. The demand for NVIDIA and Broadcom's GPUs are through the roof, and TSM cannot manufacture them fast enough. And so in fact, if NVIDIA and Broadcom had more manufacturing, they'd actually be able to deliver more of those chips and recognize more and more revenue. And so that's why they're turning over to Intel, considering the fact that Intel does have a relatively half-decent sized foundry business that they're looking to start up. And so if NVIDIA and Broadcom can perhaps manufacture some of their chips from Intel, well, that can allow them to meet a bit more of that demand. Again, is probably bullish for NVIDIA and Broadcom for sure, also likely bullish for Intel as well, considering the fact that their foundry business really has been struggling. Also still, in fact, bullish for TSM, considering the fact that they are probably running at 100% capacity and can't, in fact, deliver as many chips as NVIDIA and Broadcom would hope. Now, speaking of TSM and Broadcom and Intel, in fact, you have a possible deal to split up Intel into multiple businesses, and that deal could include TSM, could also include Broadcom as well. And so Broadcom has been examining Intel's chip design along with the marketing business, but they will only make a bid if they can look to find a partner for Intel's manufacturing business. And look, management over at Broadcom certainly isn't stupid. They pull up Intel's financials when they report it, and they see that their foundry business has really been struggling. They hear Pat Gelsinger say that the foundry business over at Intel won't even break even by about 2027, if not 2028. And so Broadcom knows that entering that foundry business is very, very tough sledding. And so they won't really go out there, make a bid alone to buy that foundry business if a company like TSM, which again has a dominant position in chip manufacturing, has certainly understood what it takes to be a manufacturer. If TSM can maybe step in and partner with Broadcom to pick up Intel's foundry business, well, then that can be, in fact, wildly successful, in my opinion, considering the fact that you could have great management over at Broadcom along with the knowledge of TSM's manufacturing business really turn the ship around over at Intel's foundry business. But keep in mind, again, Broadcom having closed that relatively large VMware acquisition, they don't have a great balance sheet to, again, make a relatively large bid for pieces of Intel, considering the fact that Intel, again, still at a relatively small valuation, still close to $100 billion. So that is your upside with Intel. But again, as it relates to Broadcom, probably is bullish if they can look to maybe pick up some manufacturing from Intel, but again, they wouldn't do it without the partnership of someone like TSMC, which in my opinion is a good move. Now, speaking of good moves, you turn over to the Broadcom Q1 financials and it doesn't get any better. You had top line revenues of $14.9 billion. That, like we said, was good for 25% growth year over year. In fact, even just a quarter ago, you were at roughly $14 billion in top line revenue. So you bolted on about $1 billion on your top line in a 3-month span. Again, that's telling you that the comment made by CEO Hock Tan saying that they're expected to add about $300 million onto the AI side certainly isn't out of reach. In fact, that's probably the demand that he's seeing. In fact, it's probably a bit underneath the type of revenues they will likely add on sequentially. Now, what's even better is the cost controls over at this company. Again, Hock Tan should absolutely get his credit, should absolutely get his flowers, because when he does a phenomenal job, well, it flows through the financials over at Broadcom, and you can absolutely see that. So from your $14.9 billion of top line, you had about $4.7 billion in cost of revenue. Again, year over year, it's not a meaningful tick up. In fact, it's about $200 million higher than you were a year ago. And on a quarterly basis, you're actually down on the cost of the revenue side. So again, keep in mind, you added on about $1 billion to your top line and you reduced the cost of those revenues by about $200 million. Again, speaking to the absolutely tremendous job CEO Hock Tan does running this business. And so that's why you're seeing your gross margins explode year over year up to $10.1 billion. What's even better though is when you get to the operating expenses, because what I want to show you is R&D last year was at $2.3 billion, which, look, off of $12 billion of revenue is pretty phenomenal. But what's even better is that actually went down on a year over year basis. Yeah, down about $50 million despite bolting on close to $3 billion on your top line. So you grew your top line by $3 billion. You shrunk your R&D by about $50 million. On top of that, your G&A went down from 1.5 down underneath $1 billion. Your amortization of acquisition costs also coming down year over year, and your restructuring as well coming down year over year. So across the board, you reduced your operating expenses, you reduced your cost of revenues despite growing your top line by about 24%. Again, shows you the absolutely phenomenal job CEO Hock Tan is doing running this company. And so that's why you're seeing your operating income go from about $2 billion same time last year, exploding to $6.3 billion in the most recent quarter. Again, $6 billion of quarterly operating income. That is phenomenal for this company, considering the fact that they can then use a lot of that cash to pay down debt, pay out dividends, perhaps even in the future continue on their buyback. So from an income statement perspective, I mean, this is an absolutely A+ income statement. Now, you do have a little bit of interest expense to the tune of about $900 million. Keep in mind, year over year, that is declining. But the reason you have a lot of that interest is because this company is holding on to a bunch of debt from that VMware acquisition that, again, will eventually roll over. And as we get down to the cash flows, you'll see this company is using a lot of that operating income to pay down some of that debt. Now, from a balance sheet perspective, you don't have a great balance sheet, certainly not like your mega hyperscalers like Google, Amazon. You're not sitting on a ton of cash, not even, in fact, like Nvidia. You have just $9.3 billion of cash and cash equivalents, about flat from a quarter ago. And when you get down to the debt, this company does have a fair amount of debt to offset that. So about $5.6 billion of short-term debt, another $61 billion of long-term debt. So keep in mind, about $66 billion of debt offset by just $9.3 billion of cash. So you are still looking at this company to pay down a lot of that debt. Again, not really an issue considering the fact that they're able to generate meaningful amounts of operating cash flows. Now, speaking of that, that came in at roughly $6 billion in the most recent quarter. Again, a year ago, you were at just $4.8 billion. A quarter ago, you were at $5.6 billion. So you're adding on meaningful amounts of operating cash flow every single quarter. And what they do with that, well, first of all, they don't have a ton of capex, about $100 million of capex. This company certainly isn't Intel, and they're not spending a lot building out a foundry business. So you have about $6 billion of quarterly free cash flow to throw around at different parts of the business. So what they do is, first of all, they come down here and they refinance a little bit of that debt and they pay back some of that debt obligations. In the most recent quarter, about $8 billion. Consider the fact that you did have about a $3 billion long-term refinancing, and then you had also about $4 billion of commercial paper added. So in my opinion, the CFO over at Broadcom is probably refinancing some of that debt at a lower interest rate, and they're looking to pay off a little bit of that debt whenever they can. This company does also pay out a dividend, which I believe last quarter they upped by roughly 11%. And so you're getting that $2.7 billion payment of dividend, continues to increase quarter over quarter, year over year as well. This company has paused on the buyback, which again, in my opinion, is actually a good thing considering the fact that they have so much debt on their balance sheet. They should look to pay that off first instead of spending money on a buyback. So again, from a financial perspective, I think this company is doing all the right things. I think the CFO is doing a phenomenal job, but more importantly, if you come up here to the income statement, I mean, the cost controlling this company does, this cost controlling CEO Hock Tan does over at Broadcom is just absolutely staggering. It's phenomenal to see as an investor. You probably don't want to see this if you're an employee, considering the fact that you could probably get paid pretty handsomely considering these results that Broadcom has just posted. Now, turning over to the technicals, you saw shares of Broadcom slide about 6% on the day. They are, of course, making up for those losses, up nearly 15%, once again entering back into this uptrending channel of higher highs and higher lows. This channel has been intact since about September of 2022. So you're looking at more than a 2-year uptrend in shares of Broadcom. And again, this is a much steeper uptrend. If you stretch this chart out over a longer period of time, you have a slightly less steep of an uptrend that dates all the way back to 2015. So again, even if shares of Broadcom retreat all the way back, they'll technically find some footing in this longer term uptrend. But again, in the more recent shorter term, you are still in a well-defined uptrend. Now, if you sort of take a look at it from a micro trend perspective, you could make the case that shares of Broadcom have started to make lower highs and lower lows. Again, that's been confirmed by those lower lows. So from a technical perspective, you could make the case that maybe at this point you don't want to step in because technically you could continue to move lower from lower highs and lower lows, especially if the market continues to remain weak over the next couple of weeks. Well, you probably can continue to move lower. But again, from a long perspective, I mean, we just took a look at the financials. That doesn't really tell me why you wouldn't want to be in this company from a long-term perspective. Also, from a technical perspective, you had this gap from your last earnings call, which Broadcom perfectly filled over the past couple of trading days, and of course found some footing right here at the $180 level, which it's seen as resistance a number of times in the past. So again, from a technical perspective, you could make the case to step in here if you are maybe bullish on this longer term uptrend, if you feel shares of Broadcom can once again resume making higher highs and higher lows, I think you would likely need to see some strength in the underlying market as well in order for that to happen. If you once again break below this, call it $200 range, well then that's your signal that shares of Broadcom likely will continue to move lower in a pattern of lower highs and lower lows. So you're really hoping for shares of Broadcom to hold this $200 range. If it does, I think you can have some meaningful upside back here in the 240s, considering the strength that we're seeing with this business's fundamentals, both from an AI perspective, but also from an infrastructure software perspective. Look, Nvidia's networking hasn't been great over the past couple of quarters, and that lands straight into the hands of Broadcom. They're certainly taking advantage of that, and it's showing through in the results. On top of that, you have a phenomenal CEO running this business, controlling costs, and running a very efficient company over at Broadcom. Very shareholder friendly. You get a dividend. You're also getting the debt paid down over time. That was my take on shares of Broadcom, a company I really like. Anytime you get declines like the one you got over the past couple of weeks in shares of Broadcom, that's when you step in and take advantage of dips on a name like this. Let me know your thoughts on this one in the comment section below. As always, thanks so much for listening, and I'll catch you guys in the next video.